Alright guys, welcome back to the channel. So today we got to talk about the elephant in the room. We sold out of YieldMax. Now for some reason my wife feels like she needs to hold a few shares in her traditional IRA. But as far as all of our individual accounts that we're living out of right now, we are out of YieldMax. Now, we're here in the dividend tracker. The resources that the guys at the dividend tracker use to import all the information about different stocks and stuff is having issues today. So you'll see our portfolio value is not correct, our yield, everything's not correct. And if you scroll down, you'll see TDAX and TSYX, they're not even in there. All right, they're showing that they're worth zero even though we have shares. The numbers are all messed up here. But we can use it to show what we're holding now, because what you'll see is there's no more YMAG. Now, I'm not saying YMAG is bad, but the expense ratio is high. The yield has been dropping, and I understand that they're trying to work on the share price, and I think there's some interest from the SEC on some of their funds and some other things going on. But I just think for us and what we're doing, it is not a good fit. All right. The YieldMax stuff, they're constantly trying to change their prospectus and fix things, but we don't need that in our portfolio. All right. Now, another big holding that has disappeared is XDTE. Now, I do not see anything wrong with XDTE. I actually had a killer cost basis on that because we bought heavy on the dip back in April, and I had a $40 cost basis on XDTE. Now, mind you, it was pretty much at that when I sold, and that's one of the reasons why. Now, XDTE, with their strategy and taxes and how their fund works, you're going to find that they pay a big payment at the end of the year, and they're giving you a big chunk of cash. But the payment has been slipping pretty bad, and there's not enough return of capital in there to warrant us keeping it in our portfolio. It just doesn't fit the strategy we're going for here. You'll be able to look at this screen and just see how much we've cut down as far as assets we're holding, and we are consolidating into things that pay lots of return of capital or have favorable tax treatment. Now, on top of that, we are upping the amount of options we're selling to offset the income going down by going into these safer assets to give us a more balanced approach. Now, one thing I want to say about moving this money over and changing things around is we do track our cost basis and where we're at with things, and we will be carrying losses forward next year for tax loss harvesting. But most of these we got out what would be called green, even though we're saying we're carrying tax losses forward. And there's a lot of ways to explain that. Some of the shares were acquired with options and other things, so it's kind of a tax mess, but we're going forward in a way that's going to be a more stable yield and a lower tax bill, which is what I'm all about. But for those of you who aren't retired yet, that also affects your ACA, which is your health care, and how much it'll cost. Because our old portfolio, we were paying $1,000 a month, and this year it would have been $1,300 a month for health care. With the way we're setting this up, even though we will be making pretty close to what we were making, it will be more like $600 a month when we get on the ACA again next year. So that just shows you it isn't always about how much you make, it's about how much you keep. But one of the things, and this is Marco's post, this is one of the things we're going to be buying into. And this is the boosted funds from Neos. Now, Neos has shown that they can keep their setups and their ETFs together, keep their NAVs pretty stable. They do change up how much they pay you percentage wise based on what the NAV is. So that in itself sets you up to succeed, because it leaves room that when the NAV goes down, they can pay you less, and you have to accept that. But as you can see, these are launching February 3rd, and I will be buying each of these. Now, I won't be buying much of the boosted Bitcoin. I do believe in Bitcoin, I really do, but I don't know that I want to stick a bunch of money in that when I already have a bunch in BTCI. So we'll kind of watch that one, because I can tell you 100% for sure that one's going to jump around a lot, and I mean a lot. Now, the next thing, and we've already put some money in this because you saw it in the portfolio, is Tap Alpha's Lift series here. The TSYX and TDAX is actually what I'm starting to find rather stable. Now, I expected the first payment from TDAX, which came out like 2 weeks ago, to be higher than normal, and I got 12 cents. And then it's showing that this week's payment will be 10 cents. So that kind of gives you an idea of what they're putting out right now. This is weekly pay, but it's distributed weekly pay. So what do we mean by that? Well, when TDAC pays, then they take and split it up, okay? So the same thing with TSYX. When T-SPY pays, they break it up over the month. So you are getting weekly, but all you're getting is somebody managing your money for you. Now, the TSYX has not paid yet because it's not time for T-SPY to start paying, but I do own the shares. Now, with these boosted funds going in, we're not going super deep in them. And the long-term plan is really just to add to T-SPY, SPYI, and QQQI. And the reasoning for that is those are our core holdings. That's the foundation. Now, as we run out of return of capital on things like Maggie and FEPI, we will have to look at either rolling them into one of these other funds or selling them after a period of time and then rebuying in to reset our return of capital, which is the same way I will handle all of these others. Because, for example, XPay down here, not a great fund in my opinion, but they're trying to do 100% return of capital. With a 20% yield, that means in 5 years, I will run out of return of capital on that. Up till that 5 years, I shouldn't really pay much taxes on their distribution. But after 5 years, I will take that and I will sell it. And I will either get taxed at long-term capital gains, which up to $132,000 is $0, or it'll be slightly at a loss and I won't get taxed at all. Okay? Then I wait 30 days, 31 days, and I buy them again. And that restarts the clock, and once again, it's another 5 years of return of capital, which means no taxes. It also doesn't count as income against my ACA plan, which is my insurance is based off how much we make. That doesn't count. Return of capital is giving your own money back, so technically you didn't make anything. So that's the plan with all these. I really feel like YieldMax helped get us here, but I don't think you'll stay retired with YieldMax. I think if you want to play the reinvesting game, it looks really good. And I know that there's some exceptions. There's Chippy, there's whatever. But unless it's on an index long-term, guys, I'll be honest, I don't know how much I trust anything. And our own options, when you start seeing us do options again, are heavily reliant now on leveraged ETFs that are index-based. The reason for that is, go check out a chart. Go check out any chart. Go anywhere and check out a chart. And you will quickly find out that indexes recover. Not all stocks recover. And high volatility names a lot of times don't recover. They stop being a sweetheart stock after a period of time. And even the biggest names that you have faith in, let's talk about it. GE. They used to be at the top. They used to be in the Mag 7. Where are they now? So nobody stays on top forever. That's a fact. So really the index does the sorting for you. So if I go sell something option-wise on like an index, it's going to recover. I mean, sooner or later. You could be in like 2022 where stuff just runs sideways or runs down, but it recovered. And that's what you want. That's what you want. That's why you see all of these are leaning into the indexes. I mean, we have Maggie here, which is the top 7. You know what I mean? FEPI is a little bit short of a true index. And BTCI is on Bitcoin, and that's really speculative part of our portfolio. But the rest of it, every bit of this has something to do with the index. Every bit of it. And it really has worked out well for us, and we can actually see our portfolio rising up and being stronger. And our options, we're very seldomly losing a trade and having to wheel that much. So just wanted to show you where we're at now. We feel very good about the names in this portfolio now. And I feel like going forward, you're going to see productive income coming out of this. Now, I will be buying those in February, which is only about a week away. So we'll get these all bought up. I'm going to do a small tranche buy first because these are all going to be 100% margin maintenance. And if you guys don't know, we use margin to sell options. So when you're buying something that's 100% margin maintenance, you can't borrow against it. So we will buy one tranche and see how they do. And then if they react the way I intend they will react, once the margin maintenance drops a little bit, we'll be buying a lot harder. And as far as the Tap Alpha series, they have 100% margin maintenance too, and that's why we're not running out to buy more than we already have at the moment. We have 75 shares of TDAX, and then we have 125 shares of TSYX. So just basically have a holding pattern going on. Clearly they're so new that the information provider for the dividend tracker doesn't even have the information on them yet. So just wanted to keep you guys updated. Make sure you check out our community tab on YouTube in the next couple of days. On the 1st, we'll post this month's numbers. They're going to be very good compared to what it's going to be going forward because we had a lot of stuff in there that we sold throughout January, plus that big XDTE payment from the end of December. Numbers are going to go down a little bit compared to that, but be on the lookout for that. And if you haven't already, and I don't know why you wouldn't have, go down, hit subscribe, hit the notification bell so you can see all of our upcoming videos. Let me know down in the comments, do you own any of these names, or are you still holding on to any YieldMax hoping they recover? We'd love to hear about it and have a conversation about it down in the comments. And with that said, I'll see you in the next one.